what we need to know. Learn these two things. Now, let me test on what I'm saying for better understanding. Let me share my digital board so that you can see. I hope you can see my board. For example, we are talking about, for example, when we are talking about PPE, then in the PPE, we have the carrying amount of my PPE, carrying amount, then we have the tax base. Let's say the carry amount of my PPE in my book is 100 million, while the tax base is 70. I still create a temporary difference, yes, but not on the same page. There is a temporary difference now. Temporary difference of how much now? So we have TD. We have the temporary difference, TD, of 30. I will now interpret, is it a deferred tax liability or deferred tax asset? We said when the carry amount is greater than the tax base, it will lead to what? Deferred tax liability. But assuming it is lesser, it will lead to what? Deferred tax assets. Now, we have now concluded what can be inferred from the standard. Let me show you what can be inferred from the standard. Look at it. That you need to know. What can be inferred from the standard IAS 12 on deferred tax? When the current amount of an item in the financial statement is greater than the tax base, it will lead to deferred tax liability in a statement of financial position, because we are talking about the end balance. When the current amount of an item in the financial statement is not lesser than the tax base, it will lead to deferred tax assets as well. Let's go further again. When depreciation is greater than the capital allowance, depreciation. Who use depreciation? Accountants. We use capital allowance, tax people. Depreciation is not greater. It will lead to deferred tax credit or tax income in the P or L. Now, let's go to when depreciation is not lesser than the capital allowance, it will lead to deferred tax charge or deferred tax expense in the P or L. That is the principles you need to take. These four. Let's test on these four principles we have said, and let's see how it will go. Good. For example, let me share. Now, question 1, Osborne Limited. Osborne buy an asset for 150,000 at the start of the financial year, at the beginning of the year. The asset has estimated life of 6 years, an estimated residual value of 30,000. Capital allowance are available at the rate of 1%, reducing balance method, and the tax rate is 20%. Calculate deferred tax asset or liability to apply in the statement of financial position for the next 3 years, and the debit and credit charge to the tax expense in the statement of profit or loss for the same period. Let's get the question very well. For me to calculate depreciation, now, for me to calculate depreciation, don't forget what is the cost of the asset. The cost of the asset is 150,000. The cost of the assets, and that's okay. What is the cost? Is 150,000, according to the question. He has given me the useful life. of 6 years. Then he give me residual of 30,000. Therefore, I will now say my depreciation now. 150,000 minus the 30,000 divided by 6 years. Divided by 6. That will give me what? 20,000 yen. So my division for each share is 20,000 yen that I will be charged. My division for each share is 20,000 and I will be charged. Now, how did they grant me capital allowance? Who use this as accountants? I'll now say, okay, how did they grant me capital allowance? Let's go to the capital allowance. For the capital allowance, the question says, the 150 is granted. I hope you can see my board.
We can see your board, sir.
Yes,
We
you
can
can
see
see, sir.
Good. Thank you. Now let's look at the capital allowance. According to the question, it says 35% on reducing balance basis. So for my year one capital allowance, I will say year one will now equal to the cost of the asset, which is 150,000 times 0.25. If you look at 150,000 and 0.25, what does it give us? So 150,000 times 0.25. That will give me 37,500. So for year one, I'm having 37,500 in year one. I will say 37,500. For year two now, I'll say year two. Total is on reducing balance basis. So 150,000 minus 37,500 bracket. How much is 0.25? What does it give us? I will ask, okay, 150,000 minus 37,500. That will give us what? Times 0.25. That will give me 28,125. Is that clear? $28,125 for year three. Because he asked one for year three, he said for the next 3 years. Okay, let me get the capital allowance. I will now say, okay, 150 minus 37,500 minus 28,125 multiplied by 0.25 will give us. And that's okay, no problem. After that is done, what does it give us? Somebody will help us. Okay, 150,000 minus 37,500 minus 28,125 times 0.25. That will give us what?
2109.
21 is 0.9. Let's approximate to 4. Is that clear? Now, after I've gotten my depreciation and capital allowance for the next 3 years, what is my amount with? I will now use the table. Let's see. I will now use the table. I will now say, okay, look at the table. Divaters table. For easy sake, year. I will say year. Who use year? Don't forget. Who use year? I'll say year. Oh. Then the next thing, we have the carrying amount. We have the tax base. We have the temporary difference, the TD. Then the question must supply me the tax rates. CR. I will now say, is it a deferred tax liability? Deferred tax. See a deferred tax liability or deferred tax. This is what I have. Then, what is my own duty? I will underline everything. I will now start year 1. 150,000. Tax base. In the day of purchase, we will give notification to the tax people with evidence that we have purchased an asset worth 150, no problem. I will now come here, there will be depreciation and capital allowance granted. Say depreciation / capital allowance. Depreciation of how much is charged? I think 30,000. Have you? How much depreciation charged on yearly basis? Let's go.
30,000 is depreciation.
20,000 on yearly basis. Have you seen it?
Okay, 20,000.
Yes, 20,000.
20,000. So,
Yeah.
that's 20,000. Then capital allowance of 37,500 was charged during the year. I will now remove 150 minus 20,000. That will give me
130.
130. This will give me what? Oh, yeah, give me the figure. Can you give me?
$112,500.
Oh, we have 112,500. Do you have a temporary difference now? Yes, we're not longer on the same page. It has created a difference. What is the difference now? I'll now say 130 minus 125,000. 130 minus 112,500. What is the difference now? 17,500. Oh, that's okay. 17,500. Let's go and look at the tax rate supply in the question. If you go to the question, you will have the tax rate available. And the tax rate is 20%. Have you seen it in the question? Or should I show you there? Let me show you.
Sweet.
Look at here. The question says, and the tax rate is 20%. We have 3 things here now. The capital allowance granted by the agency of the government, the depreciation that an accountant charge, and the rate that the government will use to collect tax, 20%. We are still on deferred tax. We are going to question that will mingle the two together. But if you can understand deferred tax very well, current tax is not a problem for me. We will do it together. So let's go back to the board. Can you see the board now?
Yes, sir.
So I will now say, what is my tax rate now? The tax rate?
20%.
20%. Thank you. I will now say, see a deferred tax liability or deferred tax asset. I will interpret now. Carry amount is greater than the tax base. Have you seen that? The carry amount is greater than the tax base. It will give me what? Deferred tax liability. Deferred tax liability of how much? Times 0.2. That will give me 35. I will now come here. So at the end of the year, we have deferred tax liability of 35.
35, yeah.
Is that clear?
Yes, sir.
Now, don't forget the closing balance of year 1 will be the opening balance of year 2. I will now say, okay, no, for year 2 now, say year 2. Why? The closing balance of year 1 will be the opening. I will still go again. I need to charge depreciation and the capital allowance. Depreciation is constant, 20,000 yearly. Then the capital allowance. Then the capital allowance. And also, what is the capital allowance in year 2? Who can give me capital allowance in year 2? So that I will not show it up. Or should I go up?
28,125.
125 naira.
28,125.
125.
So I will remove 130 minus 20 will give me 110,000. Then 1125, let's subtract 1125, 100 minus 20 is 125.
84,375.
375.
84,375.
375.
Then, as he create a temporary difference? Yes. 110 minus 84,375. What does he give us?
25,625.
25,625. Then the tax rate of 20%. So for the year 2, what is the deferred tax liability? Don't forget in exam. They will just tell you deferred tax. Don't forget, deferred tax is a credit balance in a statement of financial position. It's always in the non-current liability. It must have a credit balance. Just like your PPE have a debit balance. You cannot see negative PPE. So also we expect your deferred tax to be credit. However, sometimes we have a deferred tax asset, which we are still going. When we get to a question like money, question like dominion and everything, you will see the question when I get there. Okay. When we multiply, it's giving me deferred tax liability because the capital amount is
5125.
5125. So don't forget the closing balance of year 1 year 2 will be the opening balance of year 3, like that. I'll go to year 3. I'll say, oh, this is year 3. Then depreciation / capital allowance. Don't forget the depreciation is yearly 20,000 yearly basis. Bracket it. Then what is the capital allowance in year 3?
21094.
21094. So this will give us 90,000. Well, 84375 minus 21094, what is it going to give us?
$1094. Sorry.
63281.
What do you say?
63281.
21094.
63
281.
28.
1.
Okay, good. Has it created a difference? Yes. What is the difference now? Yeah. What is the difference? I will say 90,000 minus 63281. What does it give us?
26719.
What do you say?
26719. 719.
Well, then 20% is also a liability because the current amount is greater than the tax base. What is the 20% of this?
5344.
We have 53444.
Yes.
Approximately.
No problem. We approximate that to 534. Now, my brothers and sisters, one of the requirements of the question has been solved. What is that? The question says we should give. The question is asking us that, for the statement of financial position, what is going to be the deferred tax liability or asset? But we have gotten that it's a liability. So I'll come down. That's okay. For the solution now, So I can now get my year one. Let's see. Yeah. The one that will go to SOFP. Then remain P or L. So for the year one, we have deferred tax liability. How much is deferred tax liability in year one? Can somebody call it? I think it's 35. For year two,
5,250. 5,125.
now for year three,
5,344.
we have 5, 3, 4, 4. Good. Now let us go to the POL now. We want to get the POL. Very simple. Look, let me beside here the POL so that we can see it. I'll now say year 1, 2, 3. Opening balance. Then what do we close with? Closing balance. Well, the closing balance in year one is 35. I will write 35. Now, what is the opening balance in year one? They did not state in the question. No deferred tax brought forward. So it's going to be it's increasing from 0 to 35. That is going to be what? Charge. I'll now say charge. 35. So for the POL, 35, we don't have opening balance. In the second year, closing balance of year one will now be the opening. I will come and say, oh, 35. What do we close with in year two? We close with output, which is 5,125. And I say, what is the difference now? Oh, is it charge or credit? Charge. Why? Because it's increasing. If it is decreasing, it is going to be credit, which I'm going to see before the class ends. Oh yeah, what is the charge again? I'll say 5.25 minus 35. 5.25 minus 35. What is he giving us?
5. 1625.
POL 1625. In year three, don't forget the closing balance of year two will be the opening. And that's okay. Let's go to year three. We have 5,125. What do we close with? We close with 5,344. Do you see that? So this one will give me what? 5,344 minus 5,125. I think that will be 219.
Yes, sir.
I will now come to this side. 219. That is it. That is it. That is the requirement. Statement of financial position, deferred tax. They will modify this question now. Which the one that ICANN has not tested, we will modify it to it now, so that you can also see. Any issue? We ask question before we modify. Any issue, sir?
Hello, sir.
Yes, I'm with you, ma'am.
Please, can we have the question?
The question is on the. I don't know. Send. Let me ask my guy, Mr. Wasiu. Mr. Wasiu.
Is in the group.
It was not sent to the group.
We've not sent. Can I send?
It was
Was
sent
not
to the
sent.
group.
Eh?
Sir, I have a
You
question,
can
sir.
send. You can send. Though it's in the group. I downloaded it from the group. This.
Okay, it's in the book already.
Yes, sir.
Do I need to send
Sorry, which
again?
of the
But for
group?
those,
Sorry,
for
sir, which
those
of the
that
group?
didn't get it, you can still send.
Which group?
Please,
Because
Mr.
I
Asu, help us
don't.
handle that. Let's,
The
please shout Mr. Asu for that. But this is the
CR
question we are doing.
I
Huh?
have a question, sir.
Okay, let me answer a question here.
Sir, can you help me share more light on deferred tax liability? Oh, you said if something is greater than its liability, I want to
Now,
get that
that's
part.
what we said this is the principles you have to look at. What can be inferred from the standard IAS 12 on deferred tax? When the current amount of an item in the financial statement is greater than the tax base, sir, it will lead to deferred tax liability in the statement of financial position. But when the current amount of an item in financial statement, don't forget who use carrying amount, accountants.
Yes, sir.
Who use, huh?
Yes, sir. Yes, sir. I'm with you, sir.
Then when it is lower than the tax base, who use tax base? The tax people. What brings about different tax is the difference in view, the timing difference. The amount we recognize in 1 year is different from the amount the person recognize, the accountant recognize. So it's bringing about timing difference, although we are still going to enjoy the value later. But what is the impact on it is the deferred tax. Don't forget, the major one is deferred tax. If you can understand deferred tax very well, current tax is not an issue. It's not an issue. We are still going to the mixture of everything. Okay? Is it clear now?
Yes, sir.
Now, if you look at the solution that I've sent to the platform, it's the same thing. Carrying amount is 150, the depreciation of 120, and it has 500, the tax base, which is giving us 130, like that. Then how do we determine the movement? The way we get the depreciation, yeah, look at the solution, SFP to the P or L. Now, that is the way we get the depreciation. This is the modification. I want to see the movement. Now, this is the movement. Opening balance, there was no opening balance. But we close with 35. It's a charge. The closing balance in year 1 becomes the opening in year 2. What do we close with? We close with 55125. Then charge. The same thing. Is that clear? I hope that is clear enough.
Yes, sir.
Now, let's now modify the question. Let's
I have a
modify the
question,
question.
sir.
Eh?
So I have a question, please.
Oh, yeah, ask.
This charge you are recording under profit or loss account, what does it really represent?
That means it's an expense, not an income. It increases our tax. It increases our tax. Do you get the logic?
Yes,
You have
sir.
a
Yes.
different tax charge.
Okay.
That's where we are still coming. Now, what we have asked
Sir.
now.
Okay, sorry, sir.
Eh?
I think I was having a glitch in network at the point, so I don't know how
The line is breaking.
this 1,625. Can you hear me now, sir? Hey, he has gone out.
Sorry. Hello?
Can you hear me, sir?
Yes, I can hear you.
Okay, I said before that I was in a glitch in network when you were solving for the charge for you to 1,625. So how do you come about that, sir?
Look at it here. This is the closing balance. Do you know how we get this figure?
Yes, sir.
Now, this figure, this is our closing balance in the SFP. Statement of financial position. We close with 35, but there's no opening balance. Dash. So the charge is 35. The closing balance of year 1 will be the opening balance in year 2, 35. We close with 5.25. The charge is 1625. Then in year 3, opening balance of 5.25, we close with 535. This is the charge. Is that clear? Now,
I'm good, sir. I'm good.
eh?
I'm okay, sir. I'm fine. Thank you.
Okay. Now, now, let's modify this question. I hope you will not give me, you have your capital allowance and depreciation. Abi?
Yes, sir.
Yes, sir.
Okay. Now, let's modify the question now. Let's say we are modifying the question now. Let's say year 1, 2, 3. Depreciation, we all know, is 20,000 yearly, according to the question. Let's say they give us depreciation yearly, 20,000. And they now give us capital allowance. The first capital allowance is 37,500. What is the second capital allowance given in the question, in the solution? Let's assume the second capital allowance,
28,125.
28,125.
125.
Then the last one,
21,094.
21,094. Based on this question, this is what we have. Let's modify. Let's say they give us this question. They see our source to calculate for each year, year 1, 2, and 3, the SOFP, and either the one that will go to the POL, either charge or credit. They see our source to do that. How do we go about this? The same way you have done, ICANN has not come from this angle before. The same way you have done, I will now say, what is the temporary difference? Has it created a temporary difference? Yes, TD. I will draw, you see, what is the tax rate, the TR, which is giving us 20% in the question. Then this one will go to the POL. You see a charge / credit. Has it given a temporary difference? Yes, this one is 17,500. This will go to the POL. Why? They give you depreciation and capital allowance. The Deferred method, we are still coming to that. How do I go about it, my brothers and sisters? I will now interpret those principles that we have inferred from the standard. Let's go back to the principles now. Look at it. We said when depreciation is greater than the capital allowance, when there is greater than the, it will lead to deferred tax charge or deferred tax expense to the POL. It will lead to deferred tax credit or deferred tax income to the POL. But when division is less than capital allowance, it will lead to deferred tax charge or deferred tax expense to the P or L. Are you getting what I'm saying? Now, I will now go and interpret it now. Depreciation is not lesser than the capital allowance. This is a charge, not credit. 20% and 17,500. Where is he going to give us it? Will he give us it? To refer. The difference here, temporary difference, 8125. 20% of it. 20% of 8125. 20% of 8125. Yeah. I'm waiting. You are tired of giving me figure. Let me give myself
1625.
1625.
1625. Then this one will give me 1094. 20% of it. 219. Approximately.
219 here.
Now look at the question now. They only gave me depreciation. They only gave me, oh, that's okay. You call me. Let me erase one. Now, they've given me the one that will go to the P or L. The first one is 35, year one. I did not get this one on the state of financial position. I was okay for the year two. It's 1625. For the year three, 219. How do I get the one of statement of financial position? Very simple. Just the way I've done in the first one. I will ask, okay, year. One, two, three. Opening balance. 35. No, opening balance. No, it's not giving. Charge for the year. What is the charge? 35. We close with what? 35. 35 now. The closing of year one will be the opening. 35. What is the charge? What is the charge? I think it's 1625. Abi? 1625. At the end, you will see give me what's at the end? 35 plus 1625. 5125. The closing balance in year two, which is 5125 plus the 219 charge for the year. Do you see give me 5125 plus 219?
5344.
Do you see give me 5344? So I cannot fill in the gap. Based on this, I can have the same way. I'll now say for the first one is 35 because there's no opening balance. For the second one, what is the figure? $5125 it will still give me the same thing. Some question can decide to come 5.25,
534.
okay? 5.25,
534
53,
44.
that's all. They can give me depreciation and capital allowance. Why am I saying it? We are go to question 4. Go to Stardom PSC. You will see what I'm saying. I can have not tested this approach before on the standard, but it can come. You can do it any way you like on that deferred tax. Don't forget, we are still on deferred tax. Where we are still going, this way we are going. What is the total tax expense? Total tax expense that go to the P or L, note it today, is the current tax plus the deferred tax, movement in deferred tax to the P or L. This is where we are still going. This is the tax they charge for the whole year. This is where we are going. If you look at the question like the ABC Limited, which is on question, so many questions in that book. That is the end point. Question 11, Prospect Limited, you have to calculate the tax profits and for the period and the current tax, calculate the deferred tax. They will list everything. But I has not tested that before. But we cannot wait to that, so you must know everything. Okay? Any question before we go to question 4? Don't forget the principle. Don't forget the principles. It's very, very, very important. The principle was derived from the question, from the standards. Now, let me show you the principles again that I'm referring to. Okay. When depreciation is greater than the capital allowance, it will lead to deferred tax credit, tax income in the P or L. But when the depreciation is less than the capital allowance, it will lead to deferred tax charge or deferred tax expense. So when they give you P or L, you can still get the same thing. Now, if you go to question 4, let me share question 4 so that you can see.
Sir, please, can you share it to the WhatsApp group, please?
It's, I mean, it is there. Which one do you want me to share? Which one?
We can't find any material containing
I
this.
can't find material content here too.
Is it only the question they share? You not share the solution?
I
Wait,
didn't see
is
any
it,
material relating to this there.
or is it a different group?
I'm confused because I've sent this material since when?
She's very
Some
correct.
of
We
us
don't have
just
access.
joined the
We
group
don't have
today.
access.
We
don't have
just
access to
joined
this
the group
material.
today.
You just joined the group today. Okay, maybe that's the problem.
You can just help us to share it, sir. Thank you.
I'm trying to share it to the platform. Do I still need to share it again?
Yes, please, sir.
Better. It's there now. I've shared it.
Thank you, sir.
Welcome.
Received.
Then all the solution, you will see it immediately after the class. Okay. Can we proceed to question 4 now? Can we proceed to question 4?
Okay, sir.
No. Question 4. The following information is given in respect of the standard PSC. Non-current asset consists entirely of a plant and machinery. The net book value of this asset as at 30th June 2010 is 100,000 in excess of the tax number. Does that pass message to you? It's 100,000. The net book value of our asset is 100,000 higher than the tax base. To me, message has been passed. When the carry amount of an item is gathered at tax base, it's a deferred tax liability. So he has a deferred tax liability. The 100,000, if I multiply the tax rate, it will give me the deferred tax liability. Okay. The provision for deferred tax, all related to the fixed asset giving difference as attached was 21,000. The deferred tax. Don't forget, no question will tell you deferred tax asset, deferred tax liability. Why? Because we expect a deferred tax to have a credit balance. That does not mean we cannot have assets. Deferred tax credit will be part of non-current liability. The deferred tax asset will be just like you are not expected to have a tax credit. You are expected to pay government. It's always expense. But in some occasion, you can have tax credits. That's why they will always use deferred tax. But you look at the interpretation from the beginning. Say, 100,000. This deferred tax is deferred tax liability. Okay. The complete capital expenditure forecast indicate that capital allowance and depreciation is individual will be, they've given me here. Depreciation charge, capital allowance. Don't forget, they say the deferred tax of 21,000 in 2010. Now say 2010. Okay, the following year capital allowance are likely to continue to be in excess of depreciation in the future. Corporate tax is to be taken at 25%. Oh, that's why you have 21,000. Because 21% of 100,000 will give us what, 21,000. Now, my brothers and sisters, there is a question here. They will not give you tax rate. We are going to infer the tax rate. We deduce it from the common sense to get the tax rate, which is very easy. For example, now, if I don't put this corporate tax of 21%, you can get the deferred tax, the tax rate used. What will I multiply with the temporary difference to give me deferred tax liability of 21,000? What percentage? Let it be yes. By the time you do it, you get the answer. Okay. Now, they now give us depreciation and capital allowance. They give us depreciation 2011. Let's go to the requirement. Calculate the deferred tax charge or credit, P or F, for the next 6 years, commencing on the year ended June 2011, in accordance with the provision of IAS 12. And deferred tax balance at the end of each year, balance at the end of each year, statement of financial position, is what I have told you in the first question. They can come from different ways. They can come from depreciation and capital allowance. They can come from the bought machine. That is 2 ways. But it's what I can have been testing even at skill level. His last diet in skill level, they put depreciation and capital allowance. If you see the question, very, very easy. It does not take 10 minutes. Because some of my students are just saying, walk over. I pray for you by God's grace. This diet, corporate reporting is gone. These diets, we know they agree for ICANN. It is gone already. Now, let me share the board. Please take note of the figure as I have my own book here. Let me share my board so that we can solve. Good. Let me save this so that I can send to you. Okay, this one. D. Two. Good. Immediately I finish, I will send to you to see. Good. Let me clean the board onto N. Now, I will now go to the question. Don't forget, I will now say, oh, yeah. I'll say, yeah. The next thing, I'll draw my line. The depreciation they gave us. I'll go to the capital allowance. Temporary difference. TD. Tax rates. Next, is here my deferred tax, liability, then either credit, charge, / credit to the income statement. This is it. So we are going to do it together. I will now say 2010. In 2010, which the question does not require, does not give me depreciation in 2010, no capital allowance, but they gave me temporary difference. Temporary difference of 100,000 was given, and the tax rate was 21%. It will give me deferred tax liability of 21,000. Who can tell me what is going to be charge or credit to the POL? What's going to be the charge to the POL? What's going to be the charge to the POL? Yeah, look at it. Let's do it here. 2010, year. I'm going to be doing everything here. 2010. Opening balance. Nothing. We close with 21,000. Charge 21,000. You get that? You get that? $20,000. Do you get that? People did not talk. How do I know?
Please redo it again, sir.
Do you? Huh?
Redo it again, sir. Sorry.
You do it again. Yeah, look at it too.
Yes, sir.
Where is? Yeah, 2010. Opening balance. They did not give us opening balance. We have gotten the closing balance in the statement of financial position. 21,000. Charge of 21,000. Charge of 21,000. Now let's go to 2011. Look at it. Please be with me. I will now write 2011. What is the division they gave in 2011? They say 12,000. What is the capital allowance in 2011? 53,000. Has it created a difference? Yes. Has it created a difference?
Yes, sir.
What is the difference?
41,000.
We have 41,000 times 21%. We have to do it together. 41,000 times 21%.
8,016.
That is the charge to the POL. And also, look at it. I can start from here. 8,060. That, why do I say it's a charge? Because the depreciation is lesser than the capital allowance. Don't forget the principles. Depreciation is lesser than the capital allowance. The capital allowance is lesser than the depreciation of credit. I cannot say a system plus 21,000. What does it give us? I'll now say 21,000 plus a system.
29,016.
Okay, good. Look at it. 29,000 system. Or my brother and sister, so the difference between 12,000 and 53,000, 41,000. What is the temporary difference brought forward? I will add 100,000. This will give me 141,000. Times 21%. 141 times 21%. What does it give us? We have to do it together. Times 141. Kilo by day. It will still give you 29 system.
29 system. Yeah.
29 system minus 21,000. Minus 21,000. What does it give us?
6,000 or 8,000 system.
Anyhow you like. I can decide to come from this to this. How I like it. I can maneuver it. I can decide, okay, the temporary difference. Oh, what is the problem for the temporary difference? I had to it. Now 21,000 will give me this. With this now, let's say 29 system minus 21,000. Let me show you what we are doing. Look, this is what we are doing. In 2011, and I say, oh, yeah, look at this, 2011. The closing balance, which is 21,000. Closing balance of 2010 will be the opening. The chart for the year, I can see on the chart, 8610. So give me 29 what?
System.
29?
System.
System. Or I can decide, look at it. I can decide to get the closing balance. I can decide to get the closing balance. I can decide to get the closing balance first. 29 system minus 21,000, the charge, which you see give me 8610. Any issue? Ask me a question. Ask me a question. Let's go, but let's do another one to see. You must pass. Not only pass, you must pass and pass well. In 2012. What is the decision given? We say 14,000. What is the capital allowance? 40,000. And we interpret that. Which one do we use? Which one can we use? Can somebody give me figure? I can decide to say, oh, 40,000 minus 14,000 to get this one first. By saying 40,000,
26,000.
26,000 times 0.21. You will give me 5,460. Yeah. All the difference, 26,000. The brought forward of temporary difference last year, which is 141,000. 141,000 plus 26,000. This place will give me 167.
Yeah.
I'll say 167,000. 21% times 0.21. It will give me 35. 0.7.
70.
I will now minus 29,610. It will give me
5460.
Or I can decide to go direct here first by saying, okay, 26,000 times 0.21. 26,000 times 0.21. 5460. I will now add it to this one. Plus 29,610. 35070.
Yeah.
Should we stop here and go to another? Or we should complete it? Okay. There is a place where the depreciation is not greater than capital.
Sir, please, how did you get this 5460, please?
As anyhow, you like it. We have 40,000 minus 14,000. What does it give us? 40,000 minus 14,000.
Okay, that's 26,000.
Multiplied by the tax rate of 21%.
Okay. Okay.
It's not okay. Look at it again. I can say 26,000 plus it brought forward of temporary difference of last year, which is 141,000.
Yes,
Then 141,000 plus 26 will give me 167 times 21%. It will give me 35,070. 35,070 minus opening balance will give me charge for the year.
Okay.
Now let's go to 2013.
Hello, sir. Sorry, sir. Sorry to draw you back.
No problem now.
So the depreciation, then we have capital allowance, then
Yes.
we have temporary difference, right?
Yes.
The temporary difference is the one that is for 2011. We have 141,000. Can't we start it from the beginning? Depreciation, capital allowance, temporary difference. Can we do it from that way, sir?
I don't get
The
you.
way it is, the way
Now,
the
the way
board
it is,
is,
we have depreciation.
capital allowance, temporary difference.
Yes.
So can't we get the temporary difference first instead of going to the charge or credit?
Instead of going to what?
The last part, I know you got this 20, the last part on the board. I'm looking at this TD, the temporary difference.
Okay.
How did you get this 141,000, sir?
That's what I'm telling you, ma. What is the difference between these two? 53 minus 12,000.
It's 41,000.
Plus the 100,000 brought forward of last year.
Okay, understood.
Oh, okay, I get you, sir. Okay, we had the brought forward.
Be rest assured that this class does not only end here. You are free to chat or me at any given point in time. You are free to chat, call at any given point in time. We are in it together. Now, let's go to 2013. In 2013, we have depreciation of 20,000. And we have the capital allowance of 36,000. Now, this is 16,000 difference. But don't forget, the interpretation here will give us, is it a charge or credit? Based on the principles of IAS 12, when depreciation is lesser than the capital allowance, it is going to be a charge in the P or L. We are still coming there, you will know. The next question we are going to do now, you get it more clear. Now, the difference is now 16,000. I will now add the 16,000 to the temporary difference, or I can decide to go direct. I can say, okay, 167,000 plus 16,000, it will give me 183. I will come here. 183,000. 21%. 183,000 times 183,000 times 0.21. That will give me 38.
430.
430. 430 minus the opening balance, 35,070. That will give me 3360. And I can decide to come here first by saying 16,000 times 0.21. It will give me 3360. 3360 plus the opening balance, 38,430. Now let's proceed to the next one. In 2014. In 2014, depreciation is 40,000. Capital allowance is 32,000. Now, we're in another dynamics now. Depreciation is now more than capital allowance. This is a credit. This is not a charge again. It's a credit. So I will now say 40,000 minus 32,000, 8,000. 8,000 times 0.21. It will give me credit of 1680 to the income statement. But that comments, okay? 1680 jackets, credits. I will now say 38,430 minus 1680. This will give me 36,750. I can decide to do it the way we have been doing it. 40,000 minus 32,000, 8,000. I cannot add again. I will subtract. I will now say 143,000 minus 8,000 because it's a credit. But what I'm bringing, 183 minus 8,000. What I'm bringing is more than the credit. If you swallow it, so here I will have 175. The 21% of it times 0.21. It will still give me 36,750. And now say 38,430 minus 37, it will give me this. 2015. $44,000. $32,000. 44 minus 32. It will give us 12,000. I will now say, oh, credit. I will now say 175,000 minus 12,000. Here will give 163. %. 25% of 163 times 0.21. It will give me 34. 230. 34, 230. 36, 34, 230. 36, 750. Understand? You give me one. Or I can do direct 12,000 times 0.21, 250. Minus it from here to give me this. 2016. Let's move to another question, please. Before I proceed, oh yeah. Any question? Question 5. Question 5. Let's read question 5. Now we are listening to this. Distinguish between two perspectives of identifying different tasks. Balance in the statement, financial statement. Yes. Okay, let me save this for consumption. B3. B3 save. So what I'm saying. Now, there is two methods. There is two methods to get different. According to IAS 12, we have two methods. The first method, and the second method is what we call the liability method. How do I know the one we are using? If it makes use of the item in the P or L, items in P or L, you are using the deferred method. That's why you are seeing depreciation counter allowance. It's a deferred method. But if we give you items in the statement of financial position, if we give you items in SOFP, you are using what? Liability method. Which one is the most popular one? Liability method. So this is the two methods to calculate deferred tax. Is there a deferred method which makes use of item in the POL? That is why it's also called income statement approach method. But when you are making use of item in the statement of financial position, like machine, PPE, trade receivable, trade payable, and co, you are making use of items in the SOFP, they call it liability method. Good. Let's go back to the question. Look at this question 5. Sorry. Tola PSC. Say the following information related to Tola PSC as at 31st December 2017. Non-current asset, this is an anchor question. Non-current asset carry amount is 250 and the tax base is 218,750. Has it created a temporary difference? Yes, there's a temporary difference. Good. You see a deferred tax liability or deferred tax asset. Now let's go to the requirements. The deferred tax balance as of January 1st, 2017 was 1.5. They've given me the opening balance now. In 1st of January, they say the opening balance. So the one we are going to get is making use of statement in the statement of financial position at the end. So tax rate is 30%, but government has not announced the tax rate for 2020. It's expected to rise to 36%. Expected to rise. That will not take us a case. It's not expected. They announce what is the effect of the tax rate on deferred tax. I will show you now. It's very simple, you get it. Now, if they give me this kind of question in the exam, what is my own duty? Very simple. Let's go there. I'll take your the same thing, Tola PSC. You say Tola PSC. Now, it does not give me year. We are not talking about one item. We are talking as just items. I will say carrying amounts. Tax base. We have our temporary difference. TD. Tax rates. You see a deferred tax liability or deferred tax assets. I will underline. Good. The first item in the question, plant and equipment, let's say PPE. The carry amount was given to be 250,000. The tax base was given to be 21,750. What is the temporary difference now? Or minus? So 250,000 minus 218,750. Hope you people have not slept because I did not hear anybody.
31,250.
31,250.
Please don't sleep. I know it's not easy. If they give me tax rate, yes, 30%. But they say it's expected does not pass a law unless they announce tax rate of 30%. Good. You say a deferred tax liability or deferred tax asset. I'll now look at it. Tax rate 30%. 30% of 31,250 times 0.3. That will give me 9,375. Current amount is greater than tax base. It's a deferred tax liability. 9,3. That is that. I'll now go to the second one. We have trade receivable. We have 62,500. Tax rate, they did not give me tax base. How do I determine the tax base now? Good. Look at the principles you now apply to determine the tax base. See this one? Wait. Take this one. Okay. Okay. Look at this now. Measurement principles. Measurement principles in determining the tax base. You will now learn this at 4. And first one is 1, 2, 3, 4. The other one is ABC. A, if an item in the financial statements is taxed on cash basis, the tax base will be 0. That is 1. If an item in the financial statement has already been used in arriving at the taxable profit, the current amount equals to the tax base. 2. That is 2. The third one, if an item in the financial statement does not have tax consequence or is not deductible for tax purpose, the current amount equals to the tax base. Third one. Then the fourth one, application of accounting principles with the knowledge of the tax law to determine the tax base. If you know these 4 things, question of this type, you are home and dry. No problem. No problem. No problem. No problem. Okay. Let's go back to it. Now, I will now go to the question. Look at the question. Note 1 was on trade receivable. I will go there. The question says, trade receivable balance in the account is made up of the following amount. Balance 68750. Doubtful debt provision specific 6250. The knowledge of what? Accounting principles plus the tax base. 4. Number 4 will be applied. Why? Because there's not like provision for that debt in the tax people. So their tax base will be what? 68,750. Because they don't agree with the what? With the provision for that two debts. They did not agree with provision for doubtful debts. Has it created a temporary difference? Yes. Or not? Has it created a temporary difference? Yes. What is the temporary difference it created? Which is 6250. Tax rate of 30%. Is it a deferred tax liability or deferred tax asset? Asset now, no liability. Because the current amount is less than the tax base. I will now give me 6250 times 0.3, which is 1875 assets. Then I will go to the question again. Carry amounts. Interest receivable. We go to the interest receivable. What is the interest receivable? They say 1250. Is there any note or interest? Let's go to the check the note. So interest is taxed on cash basis. If anything is taxed on cash basis, the tax basis equals to what? 0. Has it created a temporary difference? Yes, which is 1250. What is the tax rate? 30%. Is it a deferred tax liability? Yes, liability. Because the current amount is greater than the tax base. I will multiply 1250 times 0.3. That will give me 375. If you have any question to ask, please, you can ask me.
Yes, sir. Please, the 68,750.
What do you say, ma?
It's 68,750 for the
60.
trade receivables.
Okay.
Yeah.
How do we get that?
Yes, sir.
Go to the note 1 on trade receivable. They say trade receivable balance in account is made up of the following accounts. Balance 86750. Then provision for doubtful debt. Tax people does not understand provision for doubtful debt. They say, why do you give him loan? That is the principles of accounting. It does not concern tax people. In the book of the tax people, it's 6,750 that is going to be there in their trade receivable. Not 62,500. Because if you have it, they say, we make a provision for 6250. Say, what do you give him loan when you know it's going to go back? See, as in account, we make provision, even though it's going to go bad or not, even though it's not going bad. The accounting principle will make provision for bad debt. See, that is accounting principle. We are using tax law created by government. That is why you must know those 8 things. If you know those 8 things in the measurement basis and how to determine whether it's a deferred tax liability or deferred tax asset, you are good to go. That one, the measurement basis, they will not give you. They will only be saying it to you. You will be the one you are going to use as an assignment. Oh, the solution is there itself. If I say assignment, you have the solution already. Just have said solution. What I've not said. There is no one I've not seen solution, so it should not be necessary. Looking for one question. It's just a similar, you go and study it with the solution and get back to me. That is on question 7. Look at it.
Hello, sir. Hello, sir.
Yes.
Sir, I want to ask, this doubtful debt provision, what if it's general that they put in brackets? Are we still going to disallow it?
Disallow it, my sister.
We disallow it, okay.
Yes. Either specific, they say general, they say anything. It's not in the tax law. They don't agree with it. What is this question? Now, if you look at the same principle on question, before you go, look at this question now. One of the questions said, this one is the same question, and they put 5 marks. I was just, for the calculation, I was just laughing. Look at what they say. Deferred tax asset balance. The deferred tax asset balance and the deferred tax liability. 80,000 and as at the beginning of the year. I said, I will sum it. The one that go to income statement for that year, deferred tax income, deferred tax expense. I will sum it. He's not asking me simple question. He's not asking me at the end that what amount of deferred tax movement is represented as a together as a line item in the current tax. That's not in the POA, which is deferred tax expense of 20,000 to POA. For the one that go to POA, it's either they say income. If they don't say income, they say credit. If the one that go to, if it is expense or charge, language. The statement of financial position is either is asset or liability. Immediately you can start knowing. That's why I put small those questions to clear everything. It's very simple. Look at this kind of question now. They even give me the deferred tax liabilities at the beginning of the year. It's at November. The one for the year, as an inventory is stated in the financial statement as a lower of cost and net realizable value. Who use these principles? IAS 2 accountant. It does not concern tax people. The company wrote down the inventory by 120 to net realizable value of 130. So what is going to be in the book of the tax people? I will apply that accounting principle. Number 4, measurement basis. There is nothing like writing down inventory of 120. I will add it back. 130 plus 120. That is the tax base. They say compute the relevant temporary difference and the deferred tax account. Get the temporary difference. I need to get the tax base first. Look at this one now. Trade receivable the carry amount of 450 after making general provision for doubtful debt of 30. What is going to be the tax base? You make a general provision. What you are saying, my tax base is 480 because you don't understand what is. You have made a general provision of 30. In the book of the tax people, it's going to be 480 their tax base. Immediately you can know the measurement principles and you can guess whether it's a deferred tax liability or deferred tax asset and the depreciation and the capital allowance. The next time we are meeting, this is what we are expected to do. The question I have the combination of everything. Combination of everything. Like this question. Identify the tax base and the temporary for each of the items given. Calculate the current tax for the year. Calculate the deferred tax provision. And calculate the income tax expense, which is the deferred plus the current tax. Movement in deferred plus the current tax for the year ended 31st December 2016. Immediately you can understand all this. My brothers and please, no more deferred tax. If you come, it's a walkover. Then after deferred tax, we go to earnings per share. After earnings per share, go to accounts. Go accounts. Now, let's go to the what we are doing, please. Let's go to what we are doing. Let's quickly run this one. When does the class close?
11, sir.
11 p.m., sir.
Okay, that's good. We still have time. We still have time. Okay. Now we'll go to the next one. We'll pick from there. Okay. What is the item again? Fines. It says payables, and we have fine. I will go there. Say fine. Is there any carry amount for the fine? They say it's 12,500. What is the tax base now? Is there any information related to fines? I'll go and look. Fines are not tax deductible. Fines are not tax deductible. Fines, if fines are not tax deductible, what is going to be the tax base? It does not have tax consequence. It's not deductible for tax purpose. The carry amount equals to the tax base. Straight. The carry amount equals to the tax base. I'll go to the next one. What does it say in the next one? Interest payable. Interest payable. Don't forget it said interest attached on cash basis. Interest payable. On cash basis. What is our interest payable? 2,500. The cash base. Yeah. Has it created a temporary difference? Yes. Is it a deferred tax liability or deferred tax asset? Is it a deferred tax liability or deferred tax asset?
Liability.
Let me ask again. Do you agree with him? Do you agree with him?
Yes, sir.
Yes, sir.
Yes. You all agree with him?
No, sir.
Somebody said no. My sister, why do you disagree?
Okay.
Sir, I think if interest receivable and interest payable don't usually have the same entries. They are more like opposites. So I think it should be deferred tax assets.
Okay. Opposite. What do you mean opposite? Well, you are correct, ma'am. But the word opposite here is a liability. We are paying interest. This year is minus. Students used to miss it. Which one is greater? 0 and minus 250. 1,500. Because it's a liability to us. We are talking about liability. Interest we are paying out. We are not receiving. If 0 is greater than minus 25, so it's a deferred tax asset. Asset of how much now? 0.3 times 25.
750.
750. So be careful. No other items again. I will sum. What does it give us? Sorry. What does it give us? Yeah.
The asset is 2625. That tax asset.
Ask is how much?
2625.
This
2625. 2625.
okay, let me clean this one first.
625.
I will now come here assets 2,625. Then for this one called liability.
That is 9,750.
9,000.
750.
I can't hear you. 9,375 plus
Yeah.
375. 9,750. Thank
Yes,
you,
sir.
my sister. Now, what will I do now? I will now say deferred tax. I will underline. I will say deferred tax liability 9750. Deferred tax assets 2625. What do I close with?
7125.
7125, correct. I will say 7125. That is the closing balance at the end of the year. That is the closing balance at the end of the year. This is our closing balance at the end of the year. Let's go to the requirement now. The requirement is saying calculate the deferred tax provision which is required as at 31st. So as at 31st December 2017. This one we close with. Then the question also says further. And the charge to profit or loss for the period in accordance with IAS 12. He has given me opening balance. Balance, okay? Movements in deferred tax. Good. I will go to the question. What is the opening balance? Opening balance. Brought forward of 1.5. What do we close with? Closing balance. Seven, 1, 2, 5. We charge now. 7,125 minus 1.5. What does it give us?
5,625.
5,625. That's it. That's it. Ask me a question. Ask me a question. Ask me a question. Ask me a question. In the absence of no question, let's go to question 17. Effect of change in the tax rates. Let's see. Control S. DT4. In absence of no question, let's go to question 17. Yes. Let's go to question 4. And question 17. Adola PSC. Effect of tax rates. Don't forget, we are still dealing with deferred tax. We have not done with the current tax and the combination of the question. So they give me items. They gave us the carrying amount. They gave us the tax base. And we have a temporary difference. Is he going to give us deferred tax liability? Or deferred tax assets? Oh, the tax rates. Tax rates. Tax rates. The tax rate. Then we have deferred tax liability. or deferred tax assets. So now, if you look at the item, they gave us PPE, the carry amount of the PPE, question 17 was 60,000.
60.
They gave us the tax base to be 320. What is the temporary difference?
$140.
They have 140,000. The tax rate, let's see. Look at the tax rate. Let's see the question now. The balance in the deferred tax account of 1st January was opening balance. This was calculated at the rate of 30%. Government has announced an unexpected increase in the tax rate up to the 35% during the year ended on the 1st December 2015. So in 2015, the tax rate has changed from 30 to 35%. So I will now use the new tax rate, just like our petrol. The lady government announced the changing in the petrol. It became effective on that day. So I now say, oh, 140 times 0.35. That will give me 49,000. Then next one, we have creditors receivable. Which is 18,000. And the tax base, name, that means it's on cash basis. Then 35%. You see a deferred tax liability or deferred tax asset. Liability, because the current amount is gathered at tax base. 18,000 times 0.35. That will give us 63.
3.
Next, payable. Interest payable. $15,000 jackets. Because payable is 0. You give me 15,000, 30%. I will interpret 15,000 as 30. This will give me 35. Oh, I said 30. That is 35. 35%. Huh?
5,250.
You multiply by 5%, Abi?
Yes, sir.
5,250. No other one. So I can get my deferred tax. Also, let me sum it. For the asset, I have 5,250. For the liability, 49 plus 63. 49,000 plus 63.
112,000. Oh, sorry.
It's giving me 55, 300.
300.
So, okay, 55, 300. Then I'll say my deferred tax at the end. Deferred tax assets. Which are we doing? 31st December
2050.
2015. I'll say deferred tax liability. Which is 5,300. Then the deferred tax assets. Okay. deferred tax assets, which is 5250. What is he giving us?
50,050.
Oh, thank you. 50050. This is it. This is that. But does it help me to calculate the charge? Because you give me the opening balance. Charge to the profit or loss. Yes. What is the opening balance of my deferred tax? I say opening balance. What is the opening balance of deferred tax in the question?
10,000.
10,000. Then I close. Closing balance
50,050.
50,050. What is the charge now?
40,050.
40,050. Yes, in exam, anybody that has done that must have straight. The person is wrong. Why? 10,000 is at 30%.
Okay.
And the M balance is at what?
35%.
How can you do that? I will now come here. I'll come and say adjustments. Let me use another color. I've forgotten that. Adjustments. So the opening balance. Due to change in tax rates. Good. I'll now apply the formula. Difference in rates all over old rates. All over it, multiply by opening balance of deferred tax. Good. How does it move? Is it increasing or decreasing? I'll look at it. Oh, it's increasing. Different in rates. That will give us
6%.
5%. You will now get the 5%,
Yes, sir.
which is 35 minus 30. All over old rate, which is 30%, times opening balance of deferred tax, which is 10,000. Somebody should give me one, is giving 1667. 1667.
Yes, sir.
And I said the new opening balance. Now equals to 10,000 plus the effect of change, 1667, to give me 11,667. So this one will now give you opening balance here. Let me go back to black. Opening balance here will now be 11,667. So the difference now, 50054 minus 11,667. You now give me 38. 383. That's all. That's all. That's all. Any question for me? 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 Is there anybody in this class that have seen me in person? That you have seen in person?
Yes.
Huh?
Yes, sir.
Networks?
Yes, sir.
No problem. Next. Okay. In the absence of that, let me take another one that I see involved. Another question we say, what is the answer? Okay, you can see take questions. Good. Let me take this one. Let's go to question 19. Let's use the opportunity to introduce to us a little bit of current tasks. Liberty. Yes. Okay, let me save this so that I can send to you. Do you want it to be today? We take note of the effect of changing the task. So I want to go to question number 9, money PSC. You can be seeing different approach to it. So, okay. Now, Liberty PSC. Liberty PSC year ended 31st March. What is the requirement that's going to be? Compute the amount that must be reported in Liberty financial statement for year ended 31st March 2020 and prepare the extract financial statement. I love this. Okay. So we should computation of total tax assets. Which year? 31st March 2020. Good. What is the current tax of year 2020? Let's read. Liberty ended its adverse. The balance of the current tax account for April 2019 was an over provision of tax liability. He has over provision. But I need to know the current tax of year 2020. It's okay, then I will now less over provision. What is the current tax? Current tax for the year. Then over provision will be less or over. If it is under provision, we add over provision. How much is the over provision of tax liability of 12,000? I will remove the 12,000. But he has not given the current tax for this year. That's okay. The deferred tax liability as of 1st April 20. Oh, he has given me deferred tax liability of 39,000. I can go to the working. Let's do the working beside. As of 2019, as checked. Money. As of 2019, opening balance of my deferred tax. So deferred tax. Opening balance. What is the opening balance of the deferred tax? 39,000. I should have picked another color. Okay. Now, the provision for the current tax for the year ended 31st of March 2020, he has given the current tax for that year, 31st of March 2020, has been estimated at 291,000. Don't forget, it's an estimate. 291,000. It's more than, let me remove 1 0. Okay, good. Now, that is that. As at 31st March, experts have said that carry amount of the net asset of liability of Liberty PSC exceed the tax base by 405. The carry amount now exceed the tax base. So I can get the closing balance of my deferred tax. Don't forget, I can get the closing balance of the deferred tax. Let me pick red for that. Good. And I say, calculation of closing balance of deferred tax. Good. How do I do that? He has said exceed. So he has given me the temporary difference, TD, which is 405. What is the tax rate? I will ask. The value rate of income tax is 25%. Oh, he has given me the tax rate of 25%. Good. With this now, I can now calculate my deferred tax liability. I will now say deferred tax liability. Say, okay, my deferred tax liability will now equals to 405,000 minus 0.25. Who can give me the answer? Yeah. Give me the answer.
0.50.
405,000 times 0.25.
Yes, sir.
What does it give us?
101,250.
Huh?
Let me read it.
You are saying something? What do you say?
101 250.
01
250.
250. Good. That is the closing balance of my deferred tax. 101 250. So I've gotten the closing balance. I will now come here. Let me take black again. I will now come and say, okay, closing balance. $101,250. The charge now. You see, I say, oh, charge, no credit. And I say 101,250 minus 39,000. 101,250 minus 39,000.
62,250.
62,250. Good. That is what we come to the POL. I will now say deferred tax. It is the movement to POL. Now 62,250. So this is my total tax expense. Don't forget they give us this current tax direct. So in the extracted statement of financial, So yeah, let's get the figure. What is the total here? 291,000 minus 12,000 plus 62,250.
Three,
So,
341,250.
412.
441,250.
good. Now, let's go to the extracted, B part of the question. And that's it, extracted. Statements of profits or loss for the year ended 31st March 2020. The first thing I will do, tax expense. Three, 4, 1, 2. Then I will now go to extracted statement of financial position. I will say extracted statements of financial position as at 31st March 2020. I will now say current liability. Current assets. What is the figure for the current tax they mentioned? They've mentioned the current tax for the year. To be my own, let's say the current tax is looking for the figure 291. And I say without current liability, you have your current tax 291,000. Then you now go to the non-current liability. In non-current liability, you have your deferred tax. And that's in deferred tax. How much is the deferred tax at the end of the year, which is 101,250.
101,250.
That's it. That is all. That is all. That is all. Any question for me? Any question for me? Any question for me? So I still insist and I maintain that if you have any issue after the class, you can see call my attention to some issues.
All right, sir.
Any issue? Oh, is there any question before we call it a day? What is that? As we see, take one question. This 10:52. So I want you to go through all this before the next class. In the next class, we also take current tasks, then the combination of the two issues. Then go to then the kind debaters to any special. Any issue? Or can we call it a day?
No issue, sir.
No issue.
Let's call it a day, sir.
Eh?
Let's call it a day, sir.
We should call it a day.
No issue.
Yes, sir.
You two are tired. I can understand.
We'll go through
Eh?
we'll go through the ones done so far.
Okay.
Sir, are you not tired?
Want to finish your money? Want to finish your money? You can finish it. So, Mr. Wasiu, are you there with us? My guy has left. Mr. Wasiu. Okay, let me stop share. I end the class.